Hello, hello, and welcome all to Property Forum's webinar. I'm Csanád Csürös, founder and CEO of Property Forum. Well, as many of you know, Property Forum is as a European events and media platform for the real estate sector. And again, welcome to our webinar co-organized by RICS. Our topic is obviously Hungary in light of the recent political changes in the country. The interest for Hungary is clearly strong. We have over 300 registered attendees from more than 20 countries for today's webinar, and looking at the guest list, it's quite obvious that there are many companies registering who have not been active in Hungary in recent years or ever for that matter. So it's obvious that there is an increasing interest on doing a business in Hungary in light of the drastic political changes triggered by the elections 2 weeks ago. We will record the webinar, obviously, so you'll have the opportunity to look back later on and look at the recording for the presentations and the panel discussion as well. Well, as a Hungarian, the recent events and the hope, for a better political and economic system are also an emotional issue for me and for us, obviously, and many of us here in Hungary are excited about the changes. But of course, this webinar would like to stay focused on the expected impacts on the real estate market. I believe that the changes will be very deep and widespread. Many analysts and economists in Hungary argue that the changes we are about to see now are comparable to the transition of 1990. And either way, we thought it would be important to arrange a quick update on how the local and foreign players see the current situation and what the expectations are on the market. And obviously, of course, one of the most basic assumption / hope is that Hungary will return to the map of foreign investors, as they had more or less disappeared from the country during the Orbán regime. Hopefully, we'll see this change. And today's webinar will start with 3 short presentations, one on the economic outlook, one focusing on the real estate investment situation, and in a broader sense on the commercial real estate market, and one summarizing the legal landscape, and then we'll finish with the panel discussion. And obviously, feel free to come up with any questions. There is a Q&A section here in the application, so please feel free to type in your questions. We'll try to answer those at the end of the webinar, so at the end of the panel discussion. Before we start with the first presentation, I would like to give the floor to Norbert Schömer, who is the chair of RICS in Hungary. And as I said before, RICS is the co-organizer of today's webinar and also a long-term partner of Property Forum on a number of events and occasions. And Norbert will say a few welcoming words on behalf of RICS. Norbert, the floor is all yours.
Thank you, Csanád. I really appreciate it. I think it's all our interest to bring back Hungary on the map again, to bring Hungary in the center of the focus of the property market. regional as well as European property market. And that's why I think this webinar is very important. This is the first major property-focused discussion this year after the Hungarian elections. So we experience every day renewed attention on Hungary's political and economic environment, and it's really a good moment to reflect where we are and where we are heading to. My name is Norbert Schömer. I'm the chair of RICS Hungary. I have been active on this market as a developer since 1996. RICS is 140 years old, but RICS Hungary was established at the same time in the middle of 1990s and played a key role nearly 3 decades supporting professional standards in the property and construction sector. RICS develops standards in the fields of valuation, measurement, ethics, cost planning, carbon measurement, and most recently we are working on our strategy on AI. The Hungarian property market gone through several phases. Of course, I lived through at least 2 cycles: growth, boom, recession, adjustment. Today, we are in a moment when we plan to generate growth again. But this will not happen without predictability, fair competition, and alignment with the wider CE and European practices. From a professional standpoint, how RICS can help the members as well as the whole profession, for a well-functioning market, we need equal treatment, we need accountability, we need transparency, we need sustainability, and most of all, we need the rule of law. Everybody should be equal. Within this context, the role of RICS is to support the professional dialogue, knowledge sharing, provide international standards, ethical frameworks, and engage the next generation. We have several connections with the universities in Hungary and in the CEE region. And of course, we promote the profession across the wider region. What is RICS? Well, RICS stands like a contractor's leveling road. This is a contractor's leveling road. We want to be balanced. We want to be a benchmark like this leveling road in the construction business. Today's discussion fits well into this mission. We would like to get back to normal. We would like to get back to business. We would like to get back on the map and facilitate the markets, facilitate professionalism, facilitate long-term and sustainable growth. I will not make my speech longer. I would like to give the floor to our next speaker, and Csanád will introduce her. Thank you very much for your attention, and please contact RICS when you feel like. Thank you.
Rory, thank you so much. And yes, we'd all like to get back to normal and restarting a normal course of business in Hungary. As promised, our first presentation will be on the macroeconomic outlook of Hungary, obviously in a CE context. So I'd like to ask our next speaker, Katarzyna Jędrzejewska, to join us. Katarzyna, welcome to our webinar. Katarzyna is the Chief CE Analyst at Erste Group, and the title of the presentation was From Stagnation to Reset. So hopefully there will be a reset. The floor is all yours, Katarzyna.
Thank you, Csanád, for introduction. Good afternoon, everyone. And as mentioned today, I will present shortly outlook for Hungary and regarding the CE also. So please let me share the presentation. And that actually reflects our stance. How do we think about Hungary's position at the moment? So in our view, Hungary gets a chance for a U-turn. And in this slide, I would like to show you a couple of examples while we are thinking so. It has been mentioned that there is a hope that Hungary will finally return to the markets. And actually, I think to some extent, Hungary already did return to markets. So when we look at the FX market development, Hungary rallied strongly. Hungarian forint appreciate against the euro roughly 5% since the beginning of the year. It's a clear outlier. Obviously, some of the moves has been already seen shortly prior to election, but the fact that the TISA party won the supermajority helped to move euro hoof even lower. But it's not only about the FX market where you can really see a trust or investors believe that it's worth to be on the market. Similar changes were visible on the bond market. So Hungarian yields versus peers, obviously, the spread has tightened visibly versus Czechia, Poland, and also versus Romania. Shortly prior to elections, Romanian and Hungarian bonds were close to 7%. So they were really priced at a very similar level. Now you can see the spread tighter by at least 100 basis points. So that's quite a huge change over a very short period of time, reflecting exactly the approach of the investors and the change of the assessment of the risk the country brings. So it seems that Hungary is coming back. The markets at least have a strong feeling that it might continue to do so. And obviously, I believe that I don't have to tell anyone, and this is obvious to everyone, that the first step is unlocking the EU funds. So TISA has already begun negotiations with Brussels, and we keep our fingers crossed that within this very, very short period of time and a very small window of opportunity, he will manage to secure at least some part of RRF loans. That should be the priority. When you look at the chart, the blue light dotted and green light dotted parts are about the log RRF loans and RRF grants. So there is at least 8 billion euros available. So unlocking any part of it would definitely help. We have already seen in Poland, as an example, where the change of the government led to really influx of the EU funds, and that supported the growth. Here, Hungary is on one hand in a slightly difficult position because of the short time frame, but on the other hand, Hungary has the supermajority, something that Poland and new government since 2023 didn't manage to secure. So the supermajority obviously gives an opportunity to move with the reforms and the really legal changes very fast. That could obviously help to reach the goal. It is not a secret that lack of the funds was one of the factors that weighed on economic performance in recent years. So when you look at the left-hand side chart, when we show the growth of the fixed investment over last 5 years, so the average between 21 and 25 is negative, and it's negative only for Hungary. So especially in recent years, the lack of RRF funds weighed on such performance. That, and not only that, translated into the fact that Hungary has been stagnating over last couple of years. So since 2023, we haven't seen much of the growth, and you can see that the line for Hungary is somewhat flatlined when CE average keeps slowly and continuously growing and increasing. So the unlocking the EU funds is crucial. The Poland is an example of that. And I also think that having a supermajority should help to move with the reform fast. Obviously, other factors like interest rate level, environment was also a factor holding of an investment, and already mentioned rule of law of governance that is kind of connecting the fact that EU funds were not flowing to Hungary should also improve and help the country to grow in coming years. So let me show you the growth and inflation outlook in comparison to other CEE countries. So on the left-hand side, you can see the GDP forecast. That's what we already currently think, given the Middle East conflict. This is reflecting already higher oil prices for last 2 months, and expectations that they will remain slightly higher in the remainder of the year, and also obviously inflation forecasts. Hungary is marked in pink regarding the growth and in orange regarding the inflation forecasts. So if our forecasts will prove to be correct and accurate, 1.4 growth expected this year and acceleration toward 2.2% next year is really a good and solid improvement regarding the stagnation and very meager growth over last 3 years. So the investment side should support it. We have seen a lot of optimism on the market. So all in all the puzzles show that Hungary has the potential to improve its economic performance. Obviously, unfortunately, also the global headwinds are the major and very serious risks to our forecast currently, but that's obviously something that Hungary doesn't have too much of influence on, or any other country in the region. We do hope for a relatively soon resolution of the Middle East conflict and of the oil prices and other commodity prices settling. That's why we also do not think that we will see a repetition of the inflation shock that was in 2022. Inflation will increase and is expected to increase. We revised our inflation forecasts upward in most recent weeks, exactly due to the war in Iran. But as you can see, the average of 3.7 expected this year and slight increase to 4.1 in 2027 is slightly above the central bank target, the point target, but nevertheless, it's far from double-digit inflation we have seen in 2023 or 2024. So we believe that there are two things, key things in front of Hungary that needs to be tackled on. So the first one, apart from obviously the EU funds already mentioned, but also domestically, when we look at the structural challenges, is that there is an issue of dual economy. And what we mean by that is that we also follow the Hungary's central bank assessments and the striking difference between highly productive export sector and lowly productive domestic SME sector. So really kind of figuring out how to support domestic firms and how to improve the business environment is also a factor that should help Hungary to increase productivity and also support the competitiveness. And as we see the comparison between Hungary, that is matched in a light green line, with the other of the CEE region, we see that most of the time the pattern is pretty much similar, but now the productivity is slightly lower in Hungary, so that the space was opening between the rest of the region and Hungary. But we hope that in coming years we will see the desired change. The other factor that needs to be addressed is a fiscal depletion. It was a persistent challenge since the pandemic. I don't have to mention or to say to anyone that the key fiscal balance indicators were quite elevated, and here we use the ESA comparison is showing that the budget deficit is well above 3% since the COVID pandemic. Obviously, back then, 2020 and 2021, the help was very much needed, and the fiscal expansion was a desired outcome. When the inflation shock hit in 2022 and 2023, we have seen the governments, not only in Hungary, but also in other CEE countries, stepping in and mitigating the impact of the inflation shock. And indexation of pensions took place, increasing social benefits. So that's also the part of a high budget deficits. Nevertheless, this factor needs to be addressed. Hungary has a higher budget deficit, not the highest in the region. So obviously, Romania is struggling now with fiscal consolidation, but also Poland has a very high 7% of GDP budget deficit it had in 2025, and it will remain so in 2026. Obviously, high spending on defense is one factor of the story in this country. But we see that in general, CEE region struggles with the fiscal discipline. Also, Slovakia is in the process of fiscal consolidation that began already at the beginning of 2025. So Hungary maybe is not an outlier. It fits parts of the developments in the region. Nevertheless, Hungary is currently assigned a negative outlook by all three credit rating agencies. It is relatively, let's say, safer than, for example, compared to Romania, because Moody's and Fitch rates Hungary one notch higher. Nevertheless, having a negative outlook, and this is mostly explained by the stance of public finance, is a kind of a warning sign. So the new government is expected to pursue relatively slow but gradual medium-term fiscal consolidation. And when you look at the graph, you can see a lot of pink squares. That means that not only Hungary has a negative outlook assigned, Romania struggles with a fiscal consolidation, but also Poland was recently given the negative outlook. And S&P here, we still have a negative outlook, but last Friday, Slovakia was actually downgraded by S&P by one notch to A with stable outlook. So what we've heard from rating agencies, and I was actually in the meeting yesterday where the Fitch Ratings was present, what they declare is that they will give some time for the new government to present the plan, and then they will be assessing the impact and the credibility of the fiscal consolidation, and obviously the development of public debt. So let's say it's not a pressing issue in terms that we probably will not see any change in May or June, but by November or December, at least some steps and some plan should be outlined and address this major concern. The other very strong declaration coming from the upcoming government is the euro adoption. We have written it a bit more also in our recent special report. So if you are interested, I will encourage you also to look at our more detailed analysis. But given the time frame here, let me just mention that in our view, Hungary is developed enough to embark on the path. So when we look at the GDP, as a percent of EU, we see that Hungary is close to 80%. And when we look at the countries that already are in Eurozone, only Slovenia had a higher GDP in moment of entering RM2, joining the euro, or most recently. So Hungary in this comparison really stands out, and we think is ready to embark on the path. Obviously, Maastricht criteria remain an open issue, but very strong declaration and putting Hungary on a Euro adoption path definitely will serve as an anchor also for the investors. So anchoring and giving a strong declaration, for example, by joining the banking union, would definitely support Hungarian forint and the long-term yields. What I want to also mention is obviously that Hungary would be the first free float currency to enter RM2 after Slovakia that did join the European Union in 2009. And there was very strong appreciation of the Slovak koruna. Prior to the euro, we have been asked also whether the story may repeat, because obviously that's also a very interesting position for the investors. But at this point, we do not expect such a huge appreciation. As a Slovak koruna experience, that was an unprecedented 25% appreciation. But nevertheless, joining the Eurozone is an anchor for lower Euro half levels. Also, from the point of view of the growth and the economic momentum, in 2024, 2025, all the countries benefited strongly from EU membership and enjoyed a flow of foreign direct investments and EU funds flow, and the economic boom was unprecedented by then. And actually, let me conclude with the central bank response. So we just had a meeting yesterday. The central bank left the key policy rate at 6.25, in line with expectations. And this is something what already is expected on the market. So on the left-hand side, the forward rate agreements show that after the spike when the Middle East conflict began, there were expectations that central banks may react quite quickly. It appears that they will have time, they will wait and assess the situation. They acknowledge the risks, and it's the story that we hear not only from the Hungarian central bank, but also from the other countries, that the stability of rates is most likely scenario for this year. And if the commodity prices remain slightly elevated, most likely beyond that. So at this point, we really do not expect any moves in central banks, not only in Hungary, but also in Poland, Czechia, Serbia. In Romania, we have a small cut penciled in, but this is related mostly due to the fact that at the end of the year, we will see inflation declining very strongly because the negative effects of fiscal consolidation on inflation will be fading out. Obviously, Hungarian Central Bank declared that it will follow and prepare itself for Euro adoption path once there is a clear path and a clear declaration that it should be the way to go. But at this point, current developments and obviously the risks stemming from the global environment are much more in the focus, at least for the short-term assessments. As my time is running out, I would like to thank you for the attention. As I mentioned, that we offer quite a detailed range of reports, not only on Hungary, but also on other countries. And one of our latest reports is exactly covering into more details what I shortly presented you now about the Hungary. So if you are very much interested in that topic, I encourage you to check our website. So thank you for your attention at this point. And I'm giving back the voice to the studio and the To Property Forum. So thank you for having me.
Thank you, Katarzyna, for the great overview of the economic outlook for Hungary and of course for CE as well. So thank you again, Katarzyna, for joining us. Our next speaker is Gabor Borbély, who is the head of CE research at CBRE, and Gabor will give us a picture of the current state of the Hungarian commercial investment real estate market, and of course the outlook that they are expecting at CBRE. The floor is all yours, Gabor. Thank you.
Thank you very much, Anad, and good afternoon, everyone. It's always an honor to talk about the Hungarian investment and property market, especially in such a big audience, in front of such a big audience. It is a bit more joy this time. And actually, let me start with this, that Hungary has zero to very little chance to win a World Cup. So we had to find some different channels and different ways to celebrate. And honestly, the streets of Budapest on April 12th was pretty much the same, or so the same scenes what Rome saw back in 2006 when they celebrated their fourth title in Football World Cup. But joke aside, it cannot be really overstated how important this election was, because it had the highest turnout among all the free elections in Hungary. The opposition party TISA won not only in Budapest, but in all of the regions and the key cities. And as Katarzyna already referred to that, they have a strong mandate, which implies that there won't be changes only in the government, but way beyond that. Actually, we are coming from friends, from foe to friends with the European Union when it comes to the communication of the new Hungarian government. But honestly, we've never been foes with the European Union when it comes to the average Hungarian people. We share a lot with all the other neighbors and the European community, and we are an extremely open, small economy with the strongest commitment to the EU institutions. This is the country where we have the highest approval rate of the EU out of the all member states, and obviously we share the same global trends. We see the rise of the domestic capital on the investment market. We see a strong outflow of this capital into other markets in the region, becoming or making these domestic player meaningful CE players. And we also have a significant inbound capital flow, what Katarzyna also referred to in terms of FDI. And obviously, most importantly, we have a very solid structural foundation for direct, indirect investment into real estate. This is something what Daniel, the next speaker, will address. Nevertheless, we still somehow seem to be a bit of like an island. It again cannot be repeated too often that we have seen this economic stagnation for 4 years now, which dried up all the investment opportunities in the market. I'm not talking about real estate, but in general, we have seen a free fall of investment activity by private entities in the economy. And we have seen a very negligent and intransparent investment behavior from the government. Sometimes the government was too much, sometimes it was too little. For instance, when I think of the conscious neglect of Budapest as a development opportunity for the outgoing government. So all these issues must be tackled and changed in the next cycle. The bottom line is what Katarzyna already mentioned: the lack of EU funds. I would add also the political status or the blacklisted status of the country, which kind of frightened away many investors, financiers, and also occupiers, actually, when it comes to retail, when it comes to office occupiers. Nevertheless, the property investment market followed until some point the global general trends, and I would say up until the COVID, we were in line with the trends what we were seeing elsewhere in the region. And actually, this breaking point or this pivotal point came after COVID, and this is when the investment market pattern and the direction completely derailed from the wider Central European trends. And as you can see, it bottomed out in 23-24. Last year, it was already clearly higher, and for this year, we expect a turnover around like 800 million euros. Just to put it into context, you can see the figures for other Central European markets for last year. So we can conclude that Hungary is still way below its market potential. and we clearly expect more turnover to materialize in the coming. Georgina already showed you some indicators which clearly reflected the immediate change in the sentiment on the market. Obviously, investment market and generally the real estate market needs much more time to make this U-turn. But what we see in the overall market, that there is a significant pipeline which has been built up over the last couple of years due to the lack of transactional activity, what we see. So there's a strong sales motive on the market, and clearly a high expectation of these transactions to come alive in the coming quarters or years. As I mentioned previously, the neglect of or the turn away from the Hungarian market by the Western capital, so the lack of the Western European interest left the market with a strong domestic market. 80% of the deals over the last years were done by domestic capital, which is not an outlier in the region. Similarly, we are seeing same proportions for the Czech market, for instance. But there is a clear difference between the behavior of the Czech investors on their own domestic market as opposed to the Hungarian investors. We see that the domestic capital is kind of like diversifying out of the country, and they are not really snapping the best opportunities, the safest opportunities, the prime assets in the market, but they have more an entrepreneur profile in the market. And when it comes to the new domestic money, it's clearly more entrepreneur. And that's why we haven't seen many prime transactions. And that's why it's very tough to make any quotation from the prime yield, because mostly add value and opportunistic assets are trading. The direction is definitely clear in that sense that the gap compared to the core CE markets, so like Czech, Poland, or Slovakia, is there and must remain there to make Hungary attractive again for international investors. Nevertheless, the position where we maneuvered ourselves in can be challenged in that sense that we are seeing significant price increase and yield compression southeastern of Hungary. And that's a kind of like ceiling for the yield profile what we can have here in Hungary. So hopefully with the global trends showing into the direction of easing yields, lower yields, this is what Hungary can also follow in the next years. But it's not a short-term forecast. Definitely for this year, we expect rather stable outlook for the yields. Let me briefly go through the key asset classes, and I would start with industrial because this is the most significant asset class in terms of development volume. And this has been clearly a success story, and we are seeing the fruits coming into fruition, so to say, of the industrial policy, industrial development politics of the last decade. Hungary has positioned itself as an FDI meeting point of East and West, and clearly this helped massive industrial development volume coming alive, not in Budapest, but outside of the capital city, mostly in the northern part of the country, and kind of like mirroring the key automotive and battery manufacturing FDIs which arrived at Hungary over the last 10 years. We are seeing the demand peaking above 1.1 million square meters last year when it comes to the total leasing activity in the country. We have a great pipeline, a massive pipeline, not only in the capital city area, but also outside of the capital city, and a significant leasing activity also starting this year, despite of all the political and economic struggles what the whole region is facing. Here, what we expect from the next government based on the TISA program, what is available to external parties, that they would more focus on the SMEs. As Katarzyna also mentioned in her presentation, that there is a clear gap between the productivity and the efficiency of the export-led large projects and compared to the small entrepreneurs in the economy. So there would be more funding channeled to the SMEs as opposed to the large industrial mega projects what we were seeing over the last couple of years. Nevertheless, the foundation for the industrial market and its growth in the regional markets outside of Budapest has been laid over the last decade. Talking about offices, that's an asset class which has its own challenges, global, European, and structural challenges outside of Budapest as well. But we have to bear in mind that Budapest is still an attractive city and ranks really, really high in attractiveness when it comes to high added value services, shared service centers, knowledge-based operations. And actually, this is one of the directions what the new government want also to connect to promote the high added value industries, service industries in Hungary. That clearly focuses on Budapest, which has a stock of 4.5 million square meter. And currently, on the supply side, the biggest question mark is what will happen to the something like 450,000 square meter of new public developments, which is currently with the state. State companies and entities are slowly moving in. And as you can see on the map on this slide, that this pretty much creates two distinct governmental sub-hubs or office hubs in the city center, whereas the inner parts of the city and the most demanded submarkets, office submarkets in the city have a dry availability and a dry pipeline for the next couple of years. So that's clearly an opportunity for some developers. Currently, however, what we see that there are properties being taken out of the stock and they are being retrofitted into hotels, which also lowers the availability in the city center submarkets for offices. Nevertheless, hotel is clearly an asset class which does not require significant introduction to foreigners because it's a very demanded asset class. The reason is clear. So like the fundamentals are there for continuous hotel market growth in Budapest. When we look at the overall stock, hotel stock in Budapest, it clearly is behind the potential what the tourism requires here in the city. So like compared to Prague or compared to Vienna, or 24,000 hotel rooms is clearly a short supply given the potential in the tourism growth. And Budapest fares very, very high on the list of tourism demand growth over the next 5 to 6 years. So we expect that this demand momentum will stay with us. And on the other hand, we also see that there is a political agreement to limit the short-term rental opportunities in the city. So the regulative framework is also supportive to the hotel markets, which creates also a great opportunity for new hotels. Not to mention that the hotel supply must be more diversified, given that the tourism profile is also highly diverse in the city. Having touched on the more active asset classes, I need to talk about retail with a completely different tone. The outgoing government has not been benevolent with the retail sector, to say the least. The next presenter will address many of the regulatory tools or many of the legal restrictions which are still with us when it comes to retail development or the actual business of retailers. Nevertheless, this whole legal complication and the administrative burdens led Hungary into a situation where the retail density figure is the lowest in Central Eastern Europe. And actually, we were missing like 10 years or over 10 years of completion history with only 150,000 square meters developed in the course of 10 years, which is a complete outlier compared to or peer countries in the region. On the demand side, however, we are seeing that consumption is strong, and actually it was strong over the last couple of years as we are coming out of this inflationary shock back in 23, 24, and we have a relatively solid forecast for this year as well. So we really feel that the retail market deserves more attention and needs some clarity in terms of regulation. And last but not least, I would like to mention residential because this is clearly a hot topic everywhere. Housing crisis, house price index rising through the roof, access to housing. These are all topics which have a very strong political echo. So it's clearly an area where there will be a lot of discussion. We need to set to get the picture right. So like Budapest has the highest nominal housing index over the last 10, 15 years. That's mostly due to the highly demand skewed incentives on the housing market. So practically the demand was incentivized for many, many years without any kind of incentives or support on the supply side, which got the Budapest housing market into the situation where we are now. There is a clear improvement, or there has been a clear improvement for the last 1 or 2 years. But still, if you look at the residential completion level in Hungary, which is under 2,000 new flats per annum, per million person, just to put it into comparison, this figure is around like 3.5 thousand for Czech and Slovak republics, and above 5,500 for Poland. So we have a really, really significant gap to be closed. And that's also filtering through into the rental market because Hungary lacks an institutional rental market. This is again something what we need to address, or the incoming government needs to address, that most likely this housing crisis cannot be solved on the build-to-own market on its own. This list could go on really, really long, and more details are needed to understand the market dynamics, what we are facing here in Hungary, and we are here to help you anytime. But like I would like to remind you a couple of the milestones what are important to watch in the coming weeks. First of all, that the new government will be inaugurated next week. Many of the government members are already known and warmly welcomed by the business community. As Katarzyna referred to that, Moody's and all the other agencies will say their new judgment about Hungary in the coming weeks. But most likely the most important deadline for us will be end of August, where we face a deadline for the RRF EU funds. And that will be definitely a true reflection how much money can be channeled back to Hungary. We are absolutely optimistic and very certain that we will have a very intense summer. A lot of preparation works must be done in the background, and hopefully a very busy autumn period and a lot of meetings at Expo Real. Thank you very much. Csanád, back to you.
Gabor, thank you so much for the overview, and also I think we all appreciate the optimistic note for the future. Clearly, the situation is very challenging for both, the real economy and for the real estate market. But as you stressed, also there is definitely hope. Our next speaker is Daniel Odor. He's a partner at Taylor Racing in Hungary, and Daniel will talk about the key regulations concerning the real estate market in Hungary, and giving us an overview of what were the, let's say, unorthodox regulatory and legal issues of Hungary, which to a certain extent led to a situation where a large number of international players avoided Hungary for so long. Daniel, the floor is all yours.
Good afternoon, everyone. Thank you for the opportunity to speak today. I hope that you can see now my presentation. So, in light of the recent elections, Hungary may be entering a new regulatory and economic era, potentially reshaping the real estate market as well. I believe that it is necessary, especially seeing the previous years where Hungary appeared to be a kind of a gray area in the region. While the new parliament has not yet convened and the new government is not formally in place yet, but we already know the ministers and of course the key policy points of the new governing party based on their program. And today I will lead you through the main existing issues because we don't have now the chance to speak about detailed new regulations, but I think it makes a lot of sense to speak about what should be changed in order to boost the international market, the presence of the international players. Before we start that, as Katarina has already mentioned, and I find it very important to mention it here again, that the new government has a huge majority, actually, more MPs that the previous government has had over the previous 16 years. So this is a constitutional majority which gives the new government a strong ability to implement reforms, and significant ones actually, which should strengthen the transparency. You will see in my points that basically all of what I suggest is, and what Norbert also addressed today, which is also very much in line with the RICS principles, strengthening transparency is key, and restoring the rule of law. And as we heard, as a next step, key priority shall be unlocking EU funds, and this has to be the tool for that. So basically, with that majority, we can believe that the necessary changes can be executed quickly. Using that as a starting point, I would like to explore or just tell some of the key legal instruments that the previous government introduced, and which were, in my view, not very much, or more, I would say, which were against the increase of the transactional market, because they meant a quite significant, and they are still meaning a quite significant risk for transactions. To give you the first example, I would like to talk about the priority investment regimes. There is a general one. Basically, the government can grant a priority regime to a certain project, which means that the project can be exempted from any kind of legal provision. What does it mean in the reality? Like specific deadlines for the permitting process, but it also means specific rules for the zoning. But in theory, it can be exempted from any kind of regulations. I think, and this is also in line with the new government's policy, that there can be the situation where it is justified and where we really need the efficiency and can be used in a transparent way. But we have seen over the past years that we have seen the pattern of the same players receiving such advantageous circumstances. And I believe that even if the new government decides to keep it, it shall be fully transparent, and the criteria for getting those benefits shall be clear to every market player. There are various kind of I would say already now various kind of VIP regimes. What I said, the project based, which is in the interest of like national public interest, but we have seen special ones as well, which makes the rezoning from agricultural to infrastructure project easier. And there is also, which is attached to the RAS zone qualification of the given area, which helps the certain developers to develop other kind of use at Rust Belt areas, especially residential use. And importantly, the government has introduced a new loan subsidy program last year. It's called the Otthon Start program. I don't want to go into the details. I just want to mention it as an example that if a developer is building a project, a new residential project, of which 70% of the units fit the criteria for this subsidy loan, which the buyer can take, then there is a way for a VIP regime which helps the rezoning from brownfield to other kind of use. I believe that, for example, this is a good example for which that kind of regime can be useful in order to accelerate that kind of change of use conversion, especially that we have seen several other examples for that. And this was the main driver of the Hungarian real estate market over the last couple of years. So as also the new government program says, it has to be exceptional and transparent. Another legal instrument or another interesting legal instrument is the preemption right of the state. Of course, we know in other jurisdictions, other countries as well, that in case of monument buildings, the state or the local government have certain preemption rights. I think that is, of course, very reasonable and very much justified. But in Budapest, the Hungarian state has introduced a preemption right for the entire area of the World Heritage area, which is mainly the whole downtown of Budapest. So any kind of real estate exceeding 250 square meters is subject to that preemption right, and we have seen in some occasions that the Hungarian state has exercised this right, and not in very specific monument buildings, but in other kind of buildings. So here as well, even if this system stays, I think it has to be much more predictable. Obviously, this is a risk for the investor, and the investor is already putting a lot of costs, investing a lot of money until we get the result of the preemption right. Next one, this is which is quite unique on the Hungarian market. In Hungary, it's called Plaza Stop. As Gabor already mentioned in his presentation, this is basically a ban or on developing new retail areas exceeding of 400 square meters, and it is not a complete ban. It can be only developed in case a special permit of the governmental office of the Hungarian state is granted. And this is also applicable in case you want to basically turn an existing space or already an existing space you used for retail to a new tenant. So basically, if you do a new fit out, you need to apply for that permit, which makes, I guess, everyone's life really complicated, and it is a huge administrative burden, and it also has a time effect, obviously, so that new lease agreements can enter into force much slower. And the scope of this regulation has been extended last year, during last summer, actually. It seemed first significantly, But I want to just give you as an example how the future government should not act, in my view, in order to keep the investors' trust in Hungary. So basically, all the stakeholders and marketplace learned suddenly last year, early summer, that the government is planning to basically make subject every transaction and every new lease in case of retail in Hungary. This was obviously a huge shock even for ongoing transactions. And then the consultation started only afterward with stakeholders. And after the consultation, it has been limited to grocery and FMCG retail, but still a good example for what the government should avoid in the future. It is key and important to consult with stakeholders and to give the necessary time to get prepared for new regulations. Those who know me probably also have heard that one of my favorite topics is housing. It has become my favorite topics over the last, I would say, decade, as what we have seen in Hungary and what we obviously see all across Europe, that affordable housing is more and more increasingly a political question and a very important question that all governments have to shall address. As part of RICS, I am also a member, among other Hungarian real estate members, are member of the European Housing Working Group of RICS. And we are RICS, and also my firm and me, we have worked quite a lot over the last couple of years to examine the market and the legal regulations. And what we see is that the Hungarian government has mainly subsidized the acquisition of ownership only in the last 16 years in Hungary, and especially focused on subsidies going to the demand side, so with family schemes and subsidized loan programs. But these all have just led to the highest, as we have seen in Gabor's presentation, highest housing price increase in the last 16 years. And the government was very much against the idea of subsidizing the private rental sector based on the new policies and on the new program of the new governing party. It seems that there might be a shift in this topic. And I believe that as a first step, the complete legal framework for tenancy law should be revised, as we are still basically using as a basis the act that was adopted in 1993, mainly designed for municipal rental system. So it is not aligned with the modern market needs at all, and it is not an appropriate environment for institutional investors. We believe that a new act could and should subsidize much more long-term leases, so that people who are using that option for living could feel themselves at home. And we have other, and of course, it is very important to make crystal clear that everyone has to pay the necessary taxes. And once we have the longer term rents, we can also hopefully much more attract international players who have the necessary knowledge to help the Hungarian market as well. So based on the program, one of the key political policies is that the new government wants to develop that area. So I'm also quite hopeful that this will actually happen now. As the next one, I find it quite important to also mention some very positive elements of the Hungarian legal system, which are actually very good and very investor friendly. Just to avoid that you think that right now the Hungarian legal system should be rebuilt completely from scratch, and if it doesn't happen, then you might have serious risk when investing to Hungary. I guess that for most of the investors, it was much more a political risk than a legal one so far. But I just wanted to emphasize today that the Hungarian system has been built and developed based on the German legal system. So I also experienced with international clients, especially those coming from Germany and Austria, that it is quite familiar for them. So basically, there is nothing very special, I would say. And just to emphasize that, for example, the land registry system is one of the most secured in the region. So I don't want to mention it other countries, but what I hear from colleagues from other countries, sometimes it can be very tricky whether the title of a certain real estate is correct or not. In Hungary, this is not the case. We have a very reliable land registry system. There is now an ongoing transition to electronic procedures, which is very slow, which happens very slow, but hopefully once we get to the end of the process, it will make everything faster and more efficient. The company register is already completely electronical, and like establishing a new company in Hungary takes up to maximum 1 week. So this is also quite a friendly thing in the Hungarian regulation. To mention dispute resolution, court proceedings can take quite a long time, but we have a very good arbitration system, which is effective and widely used. And as you know, we also have the rate structure, which I know that other countries are also about to implement, because we see that Hungarian real estate funds are very active and are dominant on the market, and are also investing a lot in other countries in the region as well. So as a conclusion, I want to just repeat Norbert's words that we have a legal system which is basically good and is a very solid foundation. We just need to basically follow the most important principles: predictability, transparency, and consultation with stakeholders. Once this happens, I'm pretty sure that investor confidence will be restored quickly. Thank you very much for your attention, and I'm happy to answer any questions at the end. And you can also write me just an email if you have any question that you don't want to raise it here. Thank you very much.
Lonnie, thank you so much for the legal overview. I think as a conclusion, we could say that there is a system of rule of law in Hungary. We should, I mean, the state should just take it seriously and operate it properly, and the rest should be taken care by private companies as far as the real estate market is concerned. As promised, we will end today's webinar with a panel discussion. So I'd like to ask my fellow panelists to please join me here on our virtual stage. Let me introduce our speakers. We have here with us Rita Tuza, who is a senior director at IO Partners in Hungary. We have Adrian Karcevic, he's head of divestments CE at Skanska. Manuel Simon, who is head of investments for real estate at the VIG Fund Vienna Insurance Group based in Vienna. And also from Vienna, Hannes Wimmer, who is managing director loan capital markets at Erste Group in Vienna. And we're supposed to have Balin Botos with us as well, who is managing partner of Budapest-based developer Forstay Group. So Balint, also please do join us. But I will jump in and start the discussion. we've covered, in these presentations, quite a few aspects of Hungary as a business destination, and of course, there is more that we don't know at this point than what we do know. So I'd like to step back a little bit and look at the recent past and asking you the question: what were the most important factors preventing foreign capital from investing Hungary in recent years? I don't know who'd like to start.
I can start.
Adrian, for instance.
Should I start? I can start
Alba.
quickly. Maybe
Sure.
as a very short introduction about VIG Fund, to give you some context who we are. So we are the commercial real estate part of Vienna Insurance Group. We invest into office buildings and retail buildings across CEE, mainly capital cities. We are quite active in Warsaw, Riga, and Prague, and also some smaller cities. And honestly, Budapest was always on our map. Yeah, it makes absolutely sense to grow in Budapest from our perspective. And we had a look at many buildings in the past, but we didn't acquire yet any building. It would be still a market entry. And with market entries, we are extremely careful. The last market entry was in Riga, and we have a quite strong learning curve from there. So basically, what held us back in the past, it was still surprising. Yeah, we had still the impressions that even though we found a willing seller, we didn't find the price to which we want to acquire a building in Budapest. I think uncertainty with laws and regulations was always a topic for us. Yeah, especially the buildings we look at for VIG Fund are buildings with preemption right. Yeah, so we just learned that could be a topic for investors, and exactly that was the case for us. The word corruption was not yet mentioned in the previous presentations, but we need to be careful here as well. And it's not a super strong signal here for Budapest, but careful, it must be careful. And for us, super important is vacancy level. Yeah, we follow tenants, and what we saw in the recent years is a vacancy rate which is too high from our perspective. We need a stronger occupancy rate, and we need a more liquid market. Yeah? And these were the main topics and arguments from us, not yet to invest in Budapest, but I'm certain that this is just a matter of time for us.
Absolutely. Thank you, Manuel. And I'm sure there are a number of investors who are generally active in other CE countries, but haven't been inactive in CE, who are now exploring the possibility of entering Hungary or re-entering Hungary as well. Obviously, we've seen it here at the registrations for the webinar, seeing players who have not been active in Hungary. Adrian, what's your take on this? Skanska has been here in Hungary forever, basically, and has been active all along. But obviously, as you exited some of your assets, I'm sure you've experienced a lack of liquidity, a lack of international investors compared to other CE capitals.
Yes, no, Sonat, thank you so much for giving me this occasion to speak. And I'm welcome all of the co-panelists as well. So first of all, yes, it's true. We have entered Hungary like almost 30 years ago. Yeah, so we have been through different cycles. We have been through different governments in Hungary. So we are a long-term investor, and basically this is the status for the future as well. So we want to grow in Budapest regardless of the circumstances, because we believe in the market. Yes, it's true. The liquidity has been a bit, more, I would say, tightened, in recent years. That was the case. So I mean, I remember the years where when we were looking from Warsaw with this jealous look towards Budapest because you had such a liquidity in the years of 2000 like early 2000 it was Budapest the shining star of the region. So yeah, we're jealous sitting here in Warsaw. How liquid is the market? How many investors you have? So yes, it was a totally different picture. But still, we, as we are present on the office market in Hungary, in Budapest, basically, and we are under construction with our trophy asset H2O on Váci út. So this is the second phase of our successful project. We have it already leased 100% to a tenant for long term. And then, of course, we have a third phase there, and we have a very, very good site in the CBD, in the old town of Budapest, on Holt utca. And we are looking, we're looking also to expansion in Budapest to find new sites. So we are, we are bullish about the market, and of course, the change of government will possibly create a bit more of interest from foreign investors. So we are counting on this. At the same time, we really trust in the market, and we see tenants who are expanding, and as it was the case over the last years. So on the office demand side, we see a strong and really like AAA tenants chasing the market. So it's a very good situation right now, I believe, for the Budapest going forward.
Hannes, Erste has been obviously active in the financing market of Hungary, and of course,
1997. I just looked it up. So yes, we've been through the good times and through the bad times, and we're looking forward that good times come again. What we saw, the capital was there, but even the Hungarian domestic capital looked for opportunities outside of Hungary the last couple of years. So especially markets like Poland or Serbia or Romania came much more focus than whatever happened on the domestic market. And yes, we see and hope that if this capital even partially flows back, it will stimulate the pipeline and more transaction coming to the market. As we heard from the previous presentation, there is a sales pipeline that just now looks for the relevant investors to pick it up.
Right. And who could be these relevant investors, I wonder?
See the ones that move the fastest, and I would say this already active in the market in recent months, I guess, where one comes, others will be following. Real estate funds in Poland and in Czech Republic, they do gather capital, which is not the case in markets like Austria. There we have outflows and look for other investment products, but especially in Czech Republic, there is a huge demand for such kind of products, and you see it on the transaction side with the recent sale of Palladium, for instance, or in Hungary with the EC deal in Szeged.
Rita, what's your expectation as far as potential incoming investors are concerned?
First of all, I think that the first capital back is always the most opportunistic and not the most conservative. And what I'm going to say might sound a bit surprising to some of the listeners, but I do believe that the first movers will be Hungarian money and Hungarian capital, especially those who have been very active abroad over recent years. Now they will see the time to re-enter. They know the market, they understand the risks, they know the properties, and clearly they have a speed advantage. In my opinion, they will be closely followed by domestic capital, especially from Czech Republic, as Hannes pointed out. Czech money has already been active in Hungary. However, there are an increasing number of investors closely monitoring the market. And of course, core capital is going to be back, probably with the slowest pace. In my opinion, they are going to target institutional grade ESG qualified assets. And the good news is that in Hungary, there is a broad supply of such product, basically in every asset class. So they will definitely be able to identify the right assets for themselves.
Right. Balint, you're representing a Forster Group, a local developers. Of course, you've been active in the Budapest market for many years now. What's your expectations regarding the potential changes in Hungary, and also on the other hand, what would you think that what would be the most important changes to occur for the market to perform better?
Yeah, thank you, John. I think in the recent years, what we have seen is that there was some interest, as we have a fund management company too. So there was some interest through the fund shares, but there were no direct invest in assets. So when we tried to sell, for example, the student accommodation with 400 rooms, what we have next to Semmelweis, and we put on the market, there were some interest for any investors, German investors and from other countries, but they were not giving the yield what we were expecting. And let's say what we were expecting, because the benchmark in Poland or in other countries could be comparable to the Hungarian yield expectation or from our yield expectation. So it was harder to sell any kind of assets, but through the investment shares, we were still able to involve international investors in our funds. So close to 20% of our investors are coming from abroad. So that was an interesting view, that the yield what we experienced through the operation was higher than yield what we were requiring when we put up for a sale for an asset. So that was one very interesting aspect in the recent years. In the following years, I think there could be some changes. One or two, the most important, they were mentioned already by Donny and the Gabor in the presentation. I think one of the most important thing is that the new government, even the previous government, were experiencing this affordability question in the housing market, but they were strictly going against any kind of residential rental, institutional rental systems. So although the experts in the governments, they were realizing that there will be a need to decrease the 92% owner-occupied residential rental market to a certain level, let's say just 85%, and create new stock on the institutional residential rental market. But the top head of, especially one person, I would say Orbán, was fully against to change and to open any kind of institutional residential rental market and create this system. I think that will be a very, very important change in the market in the following years, and that could help the affordability on the housing market. There are some other aspects I think we expect to change in the following years. Even as a local developer, it was pretty hard to navigate in the system and to obtain a Rust zoning certificate, let's say, as Danny said, that gives 5% advantage in the selling price of a residential unit. So it was pretty hard to obtain this kind of zonings or exemptions from the local zoning plans, and these were usually very, very hard to say how to. It was hard to obtain, and for certain parties it was easier. For the other part of the market, it was harder. But it was very hard to navigate in this system in the Hungarian even for the Hungarian developer. And I think that needs to be more objective. It needs to be more rule based in the following years, and that's must to occur, this change. I think that will be a very interesting development in the market.
Right. My next question would be about the kind of the speed of change. In a sense, both Hannes and Rita, you mentioned Czech capital to enter. Manuel said that at VIG you guys are looking at the country, but are being cautious about the first move, and I'm sure many stakeholders are also cautious. What is your overall expectation of the speed of this process? Will we see changes in incoming investors in the coming month, or will it be a slower process?
I can start again. I think from our perspective, and as stated before, we remain careful. I think it's overwhelming to see this positive spirit about the Budapest market at this very moment. I hope it remains, and I hope it is sustainable. And that's a change is visible also on short notice. Although I think some changes will simply take time, and I hope that the longer it will take, that the disappointment will not be too big. I think end of this year will show first signals. Our assumption is it will come in two waves. It was now mentioned several times as certain sell side stock has built up. I think there will now be some investors who take this window of opportunity to sell. And then we remain cautious what this mean in mid or long term. I assume for us 2027, maybe Q3, Q4 is a realistic one, because until then we will see first signals. What is the yield curve? What is the product? What is the liquidity? That is, from our perspective, a realistic timeline. We will definitely not be the first movers. We will not now jump on the first deal. Not only because of Budapest and the recent changes, but also we shouldn't forget that we have a Czech Republic, we have Warsaw, which is extremely positive for us as a group, and it's about making a choice. So I will not give up on the other countries and on great opportunities we see in other countries and cities at this very moment to allocate our complete money now for Budapest. We are long-term investors, very conservative. If there is opportunity, we can do it, but we remain still careful.
Right.
Listen, Chonad, I wish the market would be able to reset overnight, but that's not going to happen. And as Manuel pointed out, investors need transparency, predictability, liquidity, and the consistent flow of deals, not only isolated transactions. And that's going to take time. But definitely there is a large pipeline of assets under offer. And actually, we are quite optimistic and positive about the annual transaction volume, which we can expect to record over 2026. We do believe that it's going to be above 1 billion euro. And definitely that's going to help investors to become more confident regarding pricing. And also when it comes to yields, I think we will see the first signs of yield compression late this year, early next year. Definitely not a full convergence to the levels of the Czech Republic or Poland. And nevertheless, Hungary has been a yield story all the time, and it should remain one because the yield premium is part of its attractiveness. That said, I think that that the window of opportunity is now. Those investors who are able to move before the yield compression will be able to capture the premium. which is going to diminish and narrow once capital flows return.
Yeah, I see it a little bit similar. Real estate is a slow-moving business. We will need a couple of icebreakers now. We will need to see the unlock of the EU funds and the policy changes or the attempt policy changes. Then we will talk at Expo and then can spread the word there. And I guess by 2026, we will also have the years of more institutional money reconsidering investing in Hungary again. But for now, it's like those that have the information right now and can move quicker than the others that will find the nicest deals.
So, Sanat, from my end, I think we've heard that just a few minutes ago that one of the potential buyers could be Czech buyers, and I have been talking to a few of them over the last few let's say, I mean, I won't say years, but rather a year or so, and they were looking at Budapest. So it was just a question of course the uncertainty about the situation with Hungary versus United Europe and the laws and stuff. So now I believe it could be the most aggressive capital looking at Hungarian market. Yes, so I don't know how about, of course, Austrians because we have Manuel here. So he said that they are still cautious. Still, Hungary is close to Austria, so I'm sure that Austrians will be looking into Hungary. But I would bet probably on say the Czech capital, which is so hungry for investments and for a bit of a higher yield, while the yield for prime office in Prague is low 5. So if they can get a better yields in Budapest for similar assets, they could go and search for investment. So I would say so that I would tend to agree to that.
And do you expect the yield to decrease this year or the next one?
I mean, as my colleagues just said, and Rita, real estate is not a stock exchange. Yes, that it will change one day to another. You can see what's happening with the situation, the global situation. The Nasdaq and Wall Street is reacting quickly to different changes on the war with Iran. So this is not like that. Yes. So we are in a long-term business, and it will take time. But of course, there is expectation. I'm sure from all of us that the yields will be going down in Budapest because they have been on the upper side for a long time compared to Prague and Warsaw. And I remember the situation where the yields were lower in Budapest than in Warsaw. So I mean, why not? And I apologize, but I planned at the time for like 3:30, so I will have to slowly shoot.
All right. Balint, you mentioned the resi market, and I wanted to go into a little bit more detail the different asset types. Which asset types do you see the largest potential now in Budapest? Obviously, Gabor's presentation has gone through all that, but what's your take on this?
Yeah, thank you, John. Yeah, I fully agree with Gabor. What the asset types he mentioned, we are basically active in. Only one exception is the logistic or industrial properties and units. But I think hotel has lots of upsides, especially that we see that they are limiting the Airbnb numbers, or they start to limit. And in one district, it happened already. They fully banned basically Airbnb units in the 6th district, and that gives some push on the competitive hotel sectors. So hotel can be 14% of the GDP is touristical. It depends from tourism. So it's very strong in Budapest. We believe the housing housing sector, new stock in residential units, it's very low compared to any other countries in the Central European region. In Budapest, 5,000-6,000 units has been created in the last 15 years in average. That's not even 1% of the stock. So not even the recreation of the existing stock happens. So probably residential rental market will be an interesting topic in the following couple of years. But first, let's see the government, how they create the foundation in the legislation. The VAT is a main question from the 27, which is the existing VAT for residential rental units. So residential rental units, new residential property, residential for sale, hotel, I think these three, we are active, and there is a reason why we are active in these three property types.
Sure. Hannes, as a bank, which type of assets are your preferred ones for Hungary these days?
No preferences at all. So what we were looking into, definitely hospitality, definitely light industrial, logistics. On the office market, there is now a change. So we had comparatively high vacancy rates on the Váci corridor, but we also saw the conversion schemes going along. So this is somehow also supporting the office part of it. Yeah, and with retail, there we really have to look into and strong schemes, but there is no transactions on the gap through the Plaza stop. We will see how this will shape the landscape for new developments in the future.
Right. Rita, any comments on the asset types? I assume that there is a huge challenge on the office market, and not least because of the government's involvement in recent years.
Actually, we see activity in every segment of the market and in every asset class, from value-add offices to core industrial. And I do believe that we will see heightened interest for retail assets, especially from regional capital over 2026. There's definitely large appetite for centrally located assets suitable for conversion. That's a trend which popped up 2-3 years ago, and it's not going to diminish and leave us. There is a significant land banking happening, and despite of the statistics of the office market, I'm a real cheerleader for offices. I think there are great opportunities in that sector, especially because the speculative pipeline in the Budapest office market is relatively limited. 120,000 square meter is being built on a speculative basis. Out of that, actually, I believe roughly 50,000 is already pre-let. So we see an increasing shortage of large adjacent modern office spaces to come to the market in the upcoming years, which will definitely create an opportunity for core offices.
Thank you. We are getting to the end of our webinar and running out of our time. I just want to go through like one more round of question, kind of a takeaway from everyone is that if you had to name one positive sign in Hungary from the coming month that you would take as a very promising sign, what would that be? Like one positive thing in Hungary to occur.
Liquidity. That's most important thing for us at this moment. We need to see, because liquidity is translated trust. If investors come, if the deal pipeline is now converting into real transactions in the upcoming months, that is extremely important for us as long-term investor. And as I have to pick only one, I would pick liquidity.
Okay.
Chanad, last year when we were asked about our expectations for the first half of this year, we were very conservative, and we communicated that we do expect some tensions and uncertainty around the elections. What's interesting is that what we experienced even before the elections was that investment activity remained similarly active to 2025 when the first signs of the recovery were visible. The Q1 transactional activity actually was the highest quarterly activity since 2007. So even before the elections, appetite was significant, and we do expect appetite to remain significant. We do expect the consistent deal flow, which is necessary for investors like Manuel to trust the market and to rebuild confidence, because investor confidence is rebuilt through transactions. So we are quite optimistic.
Okay.
I think one important thing.
Sorry,
Hannes, just continue.
Go ahead, Hannes.
Everything is ready. Nowadays is data-driven. Once the transactions are there, what they are shaping for the future. The market is there. We are closer to it. We are faster to it before we see it in the news. We will see what is happening until summer. And once there is a voice to the government, and even if it's only plans, this will shape the market expectations for the quarters to come.
Balint?
I think one of the important things is how the new government starts to rule the country, whether they continue the previous government's exemption-based ruling. So even the more the ROS zoning and everything, if you just going for the property-related exemptions, or they start to set up a new rule-based system, and this rule is basically a fair play for everyone.
Yeah, I agree. I would personally add that the EU funds are crucial, and as both Gabor and Katarzyna pointed out, it will be in the next couple of months when we learn if and how they will get to the country, which will not only be an economic and financial significance, but also will provide us, I think, a bigger sign of how the EU government is coping with the European Union and the outside world. Well, thank you for everyone. Thank you everyone for joining us today. Thank you for our speakers. Thank you for the panelists, and we will update our readers at Property Forum about the new developments of the political and economic changes of Hungary, especially the ones which impact the real estate market, and we will come up with a new survey as well concerning the Hungarian market. So thank you everyone for joining us, and we'll keep you posted about further news.
Thank you. It was a
Thank
pleasure.
you for having us.
Bye-bye.
Thank you. Bye bye.
Thank you guys. Bye.